And a very good morning to you. Welcome to the Trigger Charts pre-market rundown for Friday, September 3rd, 2021. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and here we are again each and every week talking about what's going on in the markets, giving you a backdrop of what's happening, as well as some insights in terms of areas that are tradable. Now, remember that investing involves substantial risk. Of course, we know that. And you have to understand that everything we talk about today is for educational purposes only. So I want to make sure that you are very clear about that. So take a look at that disclosure right there and consider that. The other thing I want to mention to you is before we get started is that all of the conversations that we have on Fridays are in fact being recorded, and you have the ability to reference those at any time you want by going over to the site TriggerCharts.com, or what you could do is you can simply go over to the YouTube channel and subscribe. So make sure to check that out. Before we go any further today, we got to mention what's going on in the markets, why we're seeing such a flutter of activity. As you notice on the top here, I always have the various futures that are moving along. We got gold up nicely at 1827. That's a pretty nice little run it's had recently. Back up to the top of its range of 15, up almost 1% today. You're seeing the same thing in other precious metals due to the fact that we did see a very disappointing jobs number today. Only about 225,000 versus about 750,000 that was expected. And of course, we're getting a lot of excuses out of the economists about seasonality issues. We're starting to hear a lot of work about, well, you know what? It wasn't as bad as it seems due to this or that. And the fallback, of course, is, well, the good news is the Fed is still going to be in it. They're going to really reconsider their whole idea of tapering. So that's kind of what is in the market today. I'll also mention to you that if you want to look at any symbols that you have on your mind, please put them in the chat and we will definitely get to them. So I hope everybody is doing well. Thank you for your recent emails. You can always send information into info@triggercharts.com or support@triggercharts.com, as well as the fact that if anyone becomes a new subscriber to the Commander series, you get something very special. That's right. You get a 4-hour complimentary video series, usually valued at $199 for free. All you have to do is write us and say, hey, I subscribed. Not trial, not a free trial, a full subscription. And you get that. Send the note into support@triggercharts.com. So we got through what's happening this morning. We got through the idea of all the things that have to be disclaimed and disclosed. We looked at where we are right now. Bitcoin up over 50,000, and we're seeing the YMs. This will be juggling around pretty good today, trust me, due to the uncertainty about this jobs number that we just saw. If anything is to be similar to what we've seen in the past, you have to recognize that most people will look at this as a real thumbs up that, hey, bad is good. The theme right now, where are we in the markets? Think about where we are all the time. Right now, the backdrop and the thesis and the theme and the underlying understanding of many of the youngsters that got into, when I say youngsters, seriously, youngsters that got into trading in the last year, but also people who have really just picked up the baton very recently in the last 10 years and have seen nothing but markets go up. Well, what's the theme? What do they think? It's Tina and S. Fittler. What is that? Tina. There is no alternative. Where else are you going to put your money right now? You're going to put it into a savings account at the bank, earning 0.01, 0.1%, 0.2 maybe? Are you going to put it into bonds that are kind of really pricey right now at all-time, relatively close to all-time lows on yield and highs on prices? Are you going to put it into real estate where we're seeing prices escalate, the largest increase in overall prices that we have seen in history, an 18% number that we saw in the Case-Shiller just a couple of days ago, and year over year and month over month running very hot. The other thing is SFTLR, which is very clearly stocks for the long run. Stocks for the long run. You know, maybe it's not the best time to invest, but you know what? Is there ever the best time to invest? So that's kind of going through the minds of a lot of people right there. And I think there is a good amount of underlying enthusiasm about the future. Rates and inflation number and expectations are, as we would call it, well anchored. Well anchored meaning that we have a basic understanding that there is inflation. Is it transitory? Is it not transitory? Does it really matter? The Fed thinks it's transitory and they're holding the money. At the end of the day, think about this for a second. If you are reliant on a person or a group of people or a committee to dole out the amount of money that is available for you to buy things, don't you want to just follow along what they're doing to understand what can be bought and what others are doing? That's what the Fed is doing. Now, we can look at them as one of two ways. We can look at them as a friend or a foe. Right now, most people, again, looking at it as a friend. So I think the other thing that's really important right now is that there's a lot of people saying, hey, what's the worst that can happen? Haven't we been through the worst that can happen already? Haven't we been through a very significant amount of disruption of our lives due to the pandemic? If that didn't kill us, what will? That is, I think, the themes that are underlying a lot of what's going on and why you see a very disappointing jobs number today and some disappointing economic numbers. And while you're seeing the dip on pretty much every stock, and where we're showing you a little bit of a different tactic these days on how to do not only breakouts and breakdowns, but also looking at support points and looking at those in a market that we have, as long as it lasts. You have to remember that. You have to know your market. But as long as it lasts, let's play it. Economics, bad news is good news. Good news is great news, as we're seeing today. We're seeing a global slowdown, clearly a service index and manufacturing, factory numbers. Pretty much every metric in China is really flagging. And what's happening is that we're seeing that there is this reboot and restocking trade and process that is easing a bit. We're seeing that there are supply chain issues which are causing a lot of problems. Now, with all of that, and as we're looking at this, I think what we're really understanding about what's happening, and I think what you need to do, and I've seen this before, is look forward to China as an advanced indicator on global outcomes. We saw this back in 2009. We saw this a few other times in history, and I think we're seeing it again now, that for whatever reason, they are first to act, first in, first out concept, right? Let's look at the pandemic. I mean, crazy as it may sound, not blaming them necessarily, but pretty much did start there. First in, first out from an economic downfall. So the bottom line here is that we are starting to see that the world is slowing down. There is a concern about the Delta variant and people going out. Services clearly slowing down. A lot of the retail, high risk names, we'll call them, the high beta names, those have been also showing some problems recently. We're seeing a rotation clearly into mega caps. Look at the chart on the right here. I mean, I don't think that we have anything to deny that we saw this incredible run up over from May through July in the Qs, the top largest mega cap tech, kind of I would call it a little bit of a consolidation there. Broke above right here at the end of August, or mid part of August, I'll say. So we're talking about 1, 2, 3, 4, 5, 10 trading days from 369 to 380. A really impressive move on the up here. You would expect that, we see another plateau for a while here, but right now that's not really showing up. We don't have any clear evidence of any of that. The bottom line is that mega caps are leading the markets very significantly. And I talked about this before, and I'll talk about it again, but I think this has something to do with this mega cap safety trade. We've also 7 months consecutive 7 months of positive returns for markets. Again, a big rotation we saw in the last 4 months from value, the banks, the financials, into growth, biotech, technology, et cetera. In about the past 4 months, again, we saw big to small for a while, then small to big. And also on a regular basis, almost on a daily basis, we're seeing the market algorithms that are having a lot of fun playing games with movement. One time you'll see something like the underlying small caps, mid caps doing really well, and the big boys really taking a hit. And really, market's not moving because what's happening is we're seeing a levelizing effect on what is going on. Kind of interesting. Meme stocks. Oh, no, let's start with consumer confidence here for a second here. Consumer confidence. Well, we're seeing some slipping consumer confidence. In fact, the consumer confidence numbers that we saw over the last month or two, but especially the last one, when we dropped to the 70 range, a 7 handle on the consumer confidence, and the drop in the UMich this week, as well as the last week, and the BLS, the conference board. Conference board does that. A lot of different factors and players in this game of statistics. But we have the University of Michigan, which is a big one, which dropped very significantly. And then we had the conference board's number this week that I also saw was very disheartening. You have to realize that consumers are, in fact, pulling back. And we see that in the retail sales numbers. That's something I would be very skeptical of right now moving forward until we bottom out. Meme stocks getting less love. SPRT was smacked. We'll look at that in a second. But I think you want to be looking for the short to squeeze. That's what's going on around. There's a big process of looking for companies that are heavily shorted. Let's do our work by putting in a huge amount of out-of-the-money buys and options and calls, having the players that sell those hedge it out, buying the stock, creating a short squeeze. Then the short squeezers get involved also, and they start buying the stock and sending it up 50, 60, 70, 100%, 200%. Very important to watch for these kinds of plays. They last 2 or 3 days, very powerful, but very profitable if you can get your hands on those. We'll look at SPRT in a second. I actually did a little shorting of that, made some money on it, short at the 37 range, covered it 8 points lower. That was really nice. I think it still went down after that, though. Pandemic. Well, okay. Reopening. It looks like we're going to have a reopening no matter what. Even in Australia, they're starting to think about reopening, even though they've been really tough. New Zealand's talking about, we're going to possibly, even though we are seeing cases reopen, this is just too much. But then who knows? I mean, we are seeing a big move in Japan overnight. The Nikkei was up 2% as Suga, the prime minister, is resigning, saying this pretty much can't take it anymore. So the thought is that maybe if he does resign, we'll get somebody in there that's a little bit more easy to open up and do all that. Economics. Well, what was first? The home price index. The home price index on the last week was pretty hot. As we mentioned, ISM manufacturing came in. Initial claims and employment, again, weak this week that we saw that. Next week, light, short week. Monday, markets close. Oh, big announcement. Pay attention. Really important. We will not be doing this webinar next Friday. Taking a well-needed vacation and decided that, you know what, we just can't do it. So next Friday, do not tune in. But the following week, make sure that you are here. So that's the 10th. We're not going to be here by the 17th of September. We will be back. In the meantime, what you can do for yourself is take that time. Don't waste it. Take that time and review some of the past videos and training we have over on TriggerCharts.com. I think that would be very helpful. Some of the stocks we're going to talk about: K-Web, FUV, American Eagle. We're going to look at Marriott, GSAT, which is an interesting story that's going on, Workhorse, and a few others, plus yours. So let's take a look at a couple things here. Yeah, pretty hot. I'm going to do a quick refresh on this. I want to see something. Yep, got some clusters here. That's never a good sign. You see, in fact, we start getting clusters, and they roll over. These, what are clusters? Let me just say, this is the KRI, key reversal indicator. A cluster, kind of here. See these little red dots? Here. A lot of times you can get these clusters when they're together, multiple together, and you start running into a red zone where you start seeing that they're very, very hot levels on the bottom here. So the top shows us these levels. This is an indicator that kind of just does one thing pretty well. It takes a look at where the markets are in generally from a oversold to an overheated level. Now, I think it bears to mention that in history, approximately 80% of a stock's movement, up or down, can be attributable to the movement of underlying stocks in general. So when the markets are moving up, generally stocks move up. That makes sense, right? When markets move down, well, stocks move down, but not all the time. You could have stocks that are moving up when a market's moving down. Point is, it is really important, though, if 80% of the time that we could have an attribution of the movement of a stock to a market, we should pay attention to what the market's doing and where there are those opportunities to see when it is overdone or underdone, if you will. Underdone, like here, not in a big way, but still in the negative range. Right here, it got negative. We haven't seen very negative numbers for very long. Interesting to look at. Where are we now? Again, right now, we are in a +4. Some of the hottest we've seen, we really haven't gotten that +5. If we break through there and get to that +5 or so, +5, +6, but +5, there could be a little bit of a dip coming up very shortly. That's all that does there. So pretty interesting to look at where we are. Very hot right now, though, I would say. Let's take a look at a couple of things here. KWeb. KWeb, this is what we talked about. This is the Crane Shares CSI, the China Internet ETF. Talked about it about 44 and change. Saw that basing going on. Saw the reversal of the momentum indicator. Again, what you're looking at right now on the screen, for those of you who haven't been here before, is very simply the autopilot on the top, which is a radar screen, which gives you multiple time frame. Part of the Commander series. You're seeing the charts here. The aileron is an add-on to this. So you don't get the aileron, but you get everything else here. You get all the color coding. You get all the indicators. You get multiple indicators I'm even showing here. They give you some detailed kind of peel back the onion and figure out where things lie and where the exact levels are when we look at things. But when we look at this right now, there's something we talked about, that there was a great opportunity for this. Could not really get above its 54 level, trading at 52 and change right now. I will tell you that just clearly, this is a really important line here, right about there. 53, 53, 53, 60. We'll leave this on the chart, give or take a couple pennies on this. That's where you need to break. If you break that, you'll probably have a short squeeze right up to 60. So something to keep an eye on. FUV, interesting. Arcimoto, very choppy. They make a really cool looking roadster, electric vehicle. FUV, fun utility vehicle. That's electric. We're starting to see this pop up in the upside here. Again, getting above this level. If you want to play this on the bounces, right now about 10.5 is really an important number. Got a question about Apple, which is kind of hitting all-time highs. Not much to see here. Looks good. I don't mean to be less than enthusiastic, but it's Apple. It's moving along. It's doing its thing. It's chugging along. Could it come back a bit? Yes. Could it go up more? Yes. Right now, they even went up with giving concessions to major players on their app store, which is a little strange. When we look at this, we see the momentum indicators looking very nice. That's what a good-looking momentum indicator looks like. Not too hot, not too cold, just right there. And we're starting to see it break above here. Not a lot of upside resistance on Apple. Is that MLM? I think it's MLM, right? Yeah. Joel wants to know about MLM. From a trading standpoint, starting to look a little bit weak. Look down here. We're seeing that the momentum indicator is really coming in pretty hot. I would say that right now, I like it at 353 a lot, maybe even 371 if it comes back into that level. This is also a prime name to see a breakout opportunity. Above this level, there's really not much left. Look at this. Let's go weekly. Kind of zoom out. Woo! Above these levels, there's really not a lot of resistance. So all good. Not as nice as the Apple chart. You've been in a huge consolidation here. If you look at that and you kind of take this box, we'll move it. Let's move this down a little bit. Make it smaller just for a moment. So you got this huge consolidation that happened over time. Finally broke out above it. But right now, where are we? Well, we're still within that, right? Kind of look at that range right there. That all these, I kind of can put all of these lines that we draw, these horizontal lines that we put there specifically at these important key levels of resistance and support, of high volume nodes, et cetera. They're all listed when you click on anywhere in the chart and just run it. You'll see on the bottom, they're called lift, cruise, and stall. Unfair highs, unfair lows, point of control, different names when we look at these kinds of charts that are really important when we look at volume. And that's what's so important about this, by the way. We always talk about this, but I can't stress this enough. The reason why this works is very simple. The reason why this all works is that we are looking at volume, tick by tick volume, and looking at where we are in terms of the players that are putting their money to work at any different level. And where we see a significant amount of volume. That means that investors, whether institutions, whether individuals, whether they're sovereign wealth funds, whether they're hedge funds, whether they're mutual funds, that's where they're putting money to work, is where we have identified on these charts. Really important levels to understand. Somebody asked me about BLDR. BLDR is a builder's first source. I mean, looking good, right? You know, you got housing prices. I'm not exactly sure what they do, but I believe it's obviously in the housing or in the construction area, or in the real estate area, we'll call it. Got above its level, finally broke out, did a nice move on the upside yesterday. Probably see a squeeze up to the high. Saw this before, this same kind of pattern where we saw a nice move, then a jump. Nice move and a jump. Not sure what else has in the cannon left on this one, but you are seeing a good momentum. You're seeing above the line. Weekly, probably going to look a little tighter. Yeah, a little tighter. Good, very good support at 44. Long way away from that, but opportunity to get there. That's what I would look at, the line in the sand where I would accumulate on this if I was looking to be a buyer. AEO dropped off a cliff yesterday. American Eagle Outfitters. I always thought they were bankrupt, but I guess not. Closed all these stores and all, but they kind of had a nice run, right? From where were they at? 14.36, a triple back from where we are here in last October. Dropped off a cliff right into support. Look at that. I mean, you can't make this stuff up. Boom. Right there. 26.47 or so. Trading right above that right now, but you look kind of where those levels were, where it bounced before, and we can kind of draw those lines and then find where there's nothing. Here's a really good example of, I think there's a really good example of when we look at the amount of space, the blankness, right? If we kind of like look at this zone, look, there was nothing here. That opportunity is actually a little bit lower than that, right here. That opportunity for it to do a quick move below, if there was any negative news, very substantial. Not to mention that if you look at where we are down here, I mean, there was really a significant amount of problem starting back a while before this even happened. The momentum was negative and really ugly. That's exactly opposite of what we looked at before when we looked at the charts of Apple, let's say, and very much different than what we saw. So when you look at this and you look at the chart and you see that there is a zone of nothingness, and you see that this is kind of ugly, and you get below your level and you're starting to tap on that, you got to put a little bit of a you know, what's going on. By the way, you're starting to see the real choppiness pick up here into the open. Still holding a nice little move here and here, but choppiness picking up. People don't know what to do with this bad number. Workhorse, interesting, holding support really nicely. You know, nothing great here. I talked about this if they just can do one thing right. We noticed that there was a big move off the top as it was going yesterday. Dropped from about 10.5 down to 9.5. Pretty good move, about a 10% swing there due to the fact that there was some SEC investigation that was discussed, or nothing bad necessarily, but just looking into their books, and a short seller is getting on that pretty hard. Holding support beautifully at about $9 or so. That's an area that you want to look at. 906. I'm going to put this in here like I like to do when I look at the charts. A little bit there. 8.95, $9 right there. WSM, you know, this is, I always call this the stock that I would have never bought if I knew what they did. But since a lot of our screens bring up names that, you know, meet certain criteria, it doesn't really matter what they do. This was a I mean, look at this. Let me bring this up. That is a beautiful run. 40 at the low, 200 at the high. So I'm bringing this up because it did pop on some good earnings, kind of consolidating back here, seeing a little bit of an overbought situation. You can just easily eye this stuff on the chart, right? When you just leave a chart like this, it's easy to eye. Overbought situation, blew up to the top, parabolic move, blow off top, short squeeze, consolidating now. I would say that, you know, if you can bring it back into, I mean, you know, you can get it back to 190, 159, bit of a move away. But, you know, somewhere in the 170s, you know, 177 is decent. I would really love to see it at about 173, you know, to move there. But again, 166 is really probably my love affair number. That probably is going to stop at that level. DocuSign had some decent numbers. Stock is doing very well. There's, again, daily chart. You can do this on 30-minute chart. You can do it on minute chart, 5-minute chart. It doesn't matter. Look, you can do anything you want here. 2-minute chart and trade it on a 2-minute. I'm doing this for education and training purposes. The daily, just easy to look at, big picture. ASTR, these are the interesting company that trying to fly some rockets and kind of trying not really making it happen. This $10 number is kind of, I think, a number we need to pay attention to. 1066 is a level that I called that if we could break out through, which we could not get through, got right about to at about 1055. Let's see the exact number here. 1047 was the high that day. 1066 a number that we need to kind of get through, and then we have a little bit more. I'm starting to see a little bit of a rollover here. This move right here, and then the overdone, it got down to 887. So we're talking about, you know, a buck from there. That's a pretty good move. Probably a 10% move on the upside already. There is some hope for this, that they will launch some rockets on their 40-foot, the satellites off their rockets, being funded by the government right now. Marriott, you know, I looked at this. I saw a short some time ago. If you look at this, this is interesting. Just kind of take a step back for a second. And I want you to see something. I want you to look at this and look at this general direction. You see that? I don't think there's any question about that, right? We're not in an uptrend here, Sally. I mean, that's what I got to say about that. I would see this. And the other thing that I'm going to show you, let's clear this. When my eyes go to this chart and I look at this, what do I see? I also see kind of a area in here that has nothing. That's important to recognize. That means that you could see a very significant slippage in that area if, in fact, this does start falling. GSAT, let's go here. Big move on the upside when they announced that, when Apple announced they'll be using satellite potentially in the iPhone 13, came back a little bit when they said, well, it's only going to be for emergencies. Very interesting. Very interesting. This one, Sava, if you put in a 200-day moving average, what I don't have, let me show you what this would look like. I'm going to try to draw this. Let's just, I don't know what's down here. That's not what I want. I want this. So it kind of looks a little bit like this. Something like that. Bottom line is it's been tracking its 200-day moving average on the bottom. Not a big deal. You see an oversold situation here. That's pretty interesting. There is some claims that there is fraud going on here. Did also, more importantly, and I think that's what we have to look at here, is get to a level of support that's very significant right there at 50-50. Interesting opportunity here in this. Asana, just liquid gold. We use this for some of the things we do. Just a great company. Look at here. Look at this. Look at this momentum indicator. Look at the aileron, how great that is. Somebody's asking about Square. Square's trying to get into the various businesses that others are in, crypto, stock trading maybe, obviously payment processing they do currently. They need to really get some more momentum. A lot of overhead here at 273, 274. Right now trading at 260, 266. Triple top here, not a big deal, but it's definitely a triple top or even a quadruple top going on. Something to watch for. SPRT, support.com. This is the one I was showing you. This is one of those pop and drop deals. Interesting how it had nice momentum. It's held at $6, went up to about 68, currently trading at 21. I shorted it up here, right about here, 37 and change. Covered it at probably down here. I didn't want to hold it overnight. And we saw a pretty interesting and nice position gain on that for my account. So that was good news overall. Let's see what else is going on. We don't want to look here. Movers. Anything interesting that we're finding here? PagerDuty has some earnings, really good earnings last night. A couple other names. MongoDB, I believe, also had some good earnings. Watch that today. Uranium's been kind of interesting. I've been watching this kind of move up lately. A lot of people love uranium for whatever reason. Yext, social media company that tries to optimize your Google for companies, kind of having a little bit of a letdown today. What else do we got here? Anything else interesting? I don't think anything interesting. Well, we're going to end it there. Please do me a favor. Check out all the things that are available to you on the website, TriggerCharts.com. You see it right on the top right there. And make sure if, in fact, you are a serious trader and if you want to get the 4-hour free course, all you have to do is sign up for a TriggerCharts Commander Series subscription. We'll send it right to you. Thanks for joining. We'll see you in 2 weeks. Have a great day.